All right, good afternoon. The market just go 5 minutes, 6 minutes ago, and today is Friday, February 23rd, 2024. So it's last trading day of this week. Right, this week is very short, and the volume for today, and today is closed at 407.82 right there. The volume for today is not huge at all. It's just below the average, 20 million below, so very low volume. Today they just try to Friday, right? Option expiration week, so they may manipulate right now. And we are in the week 8, and for this week in February, nothing special about option expiration. But next month is gonna be huge quarter expiration, and we're also looking for the week of I think it's the week, second week. Yeah, even though it's second week, but it's you can call third week of March right there for the FOMC meeting, and before that we have this CPI data, so it's high impact news right there. And today pre-market is not really huge at all. All right, go back to our chart today. We have a beautiful chart. Okay, you see all the box right there. That's the idea of quarter theory, and we got idea from this guy on YouTube. I think he trade ITC concept. You put into the search ITC quarter theory, YouTube video will come up. All right, his name is Days. I think he have an account on Twitter also. If you follow him on Twitter, but it's very interesting theory. It really make the ICT concept is more precise, right? At first, when we look at the ICT, it's still a lot of ambiguity for us, right? Ambiguity. But if we study or look at the guy Days quarter theory, it makes a lot of sense, and we play with that theory for the last couple of days, especially start from this week. I think he bought this YouTube video 5 months ago, and it come to our recommendation just a few days ago this week, and we watch it, which it's really amazing. It opened our eyes, and we play around for a couple of days, and we see really help us to see how the algorithm right there. So basically, the idea that we divide the New York, right? I mean, you can watch his YouTube video and see more detail. But for now, we just focus on the New York section, right? The AM and the PM. So Q stand for quarter, right? So the idea that we divide each section, right? We have Asia, London, and then New York. For New York, AM section is start at 6, right, and end at 12, right there. So 6 hour, right? 6 hour. Then we divide it into 4 quarters. So that's the whole idea. 6 hour, we divide 4 quarters. And then the same idea right here from 12 to 6 p.m., right? But we don't trade after the market, but the idea is the same, right? So it's close, and then to 6 p.m., which is 18 o'clock right there. And first, if you trade if we trade future, right, then we can do, you know, Q4 right there. But for stock right now, we just practice on a SPY, so we just stop right here at 14 right there. We don't care about the Q4 at all. Okay, so look at here, right? But you know, it's very clear, right? The first quarter in the video, you know, they explain, right? If you see the first quarter, you know, it very depend, but at least it gives us another data point to make a preference and make it easy to check the trade. So here for today, for example, right, we have a Q1 is kind of, you know, expansion, you know, you click accumulation, and then Q2 you see expansion right there. Is expansion. And the open of the Q2 at 7:30 is the real open of the day. So that's the theory, quarterly theory, and we mark that with a special color right there, and it's a Q2 open right there, open at 407.98 right there. So basically we see that for today the Q1 and the Q2, quarter one and quarter two is expansion, right? And then you see that right here Q4 it gives us Q3 is also expansion. So this is a manipulation right here, or the Judas swing right here. You see how beautiful it light up with the time right there. So it's, the time is also a critical element when we do trading. All right, sometimes we forgot, we say, oh, just look at the price only. But if you know, you see that we have two axes right here, right? We have the time axis, you know, with the X right there, and then you had the price, which is the y-axis. So that this is the function of both, you know, of time and the price. So you cannot, in order to trade effectively, we cannot ignore the time right there. Actually, the time is more important than the price if you're thinking deeply, because of the, you know, in a function, right, you have the coordinate, right, at linear function. Let's say, you know, just linear for now. So for linear function, you have the function y, right? And y is called a range, and x is a domain, right? So basically, x is input, and y is just the output. That means it's based on the price. I mean, based on the time right there. I think it's called range and domain. Yeah, domain and range. So the domain is equal to entire set of your number. Okay, so the y is the x is a domain right there, and the y is the range. That. Yeah. So in this case, the time is a domain, and the price is range right there. So, and you can see that it's related in the time. Very critical right there. And look for today. I mean, if you see this is a Judas swing, Then wait for around 10:30, you will see a move. 10:30, you see right there, this move. Yes, 10:30, this move is set up for what? For distribution, right? You have so-called, AMDX, right? That's the idea right here. AMDX. So that's the model right there, right? You have accumulation, manipulation, distribution. So the Q1 and Q2 is kind of in this case, it's not really accumulate, but it's expansion. And then it really gives us more that the distribution is going to be huge because it's manipulation and then distribution right there. Yeah, so it's and then whether the X is going to be after distribution, it's going to reverse or not. Okay, so X, it can be reverse or continuation. But where is the stop of the distribution? Here level, right? This level is from yesterday BM section. You see, yesterday, Thursday, here's our BM section right there. We draw yesterday, we call, this is key level. And pay attention right here. Whenever you see a level that have a favorable graph, in this case, the upward favorable graph, but in this case, downward favorable graph, that is the key level. That's the lesson we learned, a couple of weeks ago, we just learned about that, and today we saw again. So it really helped us right there. Not every level is a key level. Pay attention to the level that, break out by the favorable gap, and this is also key level right there, right? That's how we identify key level right there. Or in our case, we call breakout level, right? You can break it out, or it can be for breakout level. So just yesterday, right, is the PM section from, exactly 30, right? So this level, actually level, but this level have a bigger, so we go with the level. So basically from PM section yesterday, the whole thing right here, the whole liquidity right here, right? And today, look, man, look at the Judah swing. Perfectly the Judah swing on, from 9 to 10, 30, 25, around there. That's Judah swing right there. And after the Judah swing gonna happen, this is the manipulation. It's gonna distribution, and it's gonna seek the low of the Thursday PM section. Exactly, you see that? 507. 23 right there. I mean, it's really amazing how accurate the algo run right there. All right, we're so happy that we see things start, better now. We start like a puzzle, right? Picture puzzle right there. And the guy with the quarter theory really helped us a lot. Before that we kind of struggle to study the ICT concept, but with his information, we can put pieces together much easier now. Okay, so now how do we trade this, right? We see the manipulation right here, and look, I think ICT did mention about this model. Judah swing, right? And then AM for the distribution that hit the low of the yesterday, PM section. But more accurate, in this case, it should be not just the low, it's just the critical level, the level that they are breakout, right? But if we follow right here at the 30, it did not reach level, right? It's just, you see that? It did not reach the level at all. but it did that level. That will help us to refine our level very accurate right there. Okay, let's look at the ICT so-called life right here, right? Okay, we get this, we give credit to, this is her name. She created this beautiful chart right here. Basically, the very first model that ICT present for the life, 1-3 setup for life right here, right? So we mark up, and in this case, they said highest or lowest, but more accurate, more precise, it's not the higher. It should be the breakout level. Breakout level on the sell side and breakout level on the, excuse me, we misspoke. The breakout level on the buy side and breakout level on the sell side, right? That will be more accurate, because today, if we mark the PM section stop, 130 right here, right? We mark the lower here, it will never reach the low. So we can redefine that model, say that should be the the breakout level at the sell side and breakout level at the buy side. That's more accurate. Right here is a little bit, ambiguous right here. Okay, so that's what we saw so far. Okay, so now we see the swing right here. That is the swing, the Judah swing right there. It break out the breakout, the key level of the prior day sell liquidity. In this case, this model is this model is the inverse of the situation we see today, but just the same model, right? This is for long, right? But this model we have today is for short, but the same idea, right? For short, you wait for the Judah swing or manipulation above this key level from the prior day PM section, wait for it, and then looking for the entry around 1030 or 1040. In this case, 1040, perfect, right? Just the same idea. So right here, this model is the inverse, right? This is for long, but today we have this. This is for short. And look at this right here. So how do we entry? Okay, today we have, we have auto block right here, right? This is the key level we identify, right? Actually, key level, we see the auto block, the bearish auto block, boom, move down. Not auto block, right? Right, boom, huge move. But, somehow the algorithm don't let it down. It's very tricky right there. It go back and retest that breakout level one more time. Excuse me, and at that around 10, it creates so-called proportion block right here called PP, which is a proportion block. The idea from ICT basically is a auto block, right? But it continues the auto block and it moving down, right? So when the market moving down, looking for the up close candle, right? But if the market moving up, looking for the down close candle. So that's an idea right there. So the logic is opposite of the retail, right? Retail, when we see that, it's down close, it must be short, but it's not. Right now it's uptrend, so this is the where we put the entry long into. Okay, so go back to this idea. You have a proportion block right here, and you see that right after it tests this one, it's reject right there. We should enter right here, right? We put a buy sell stop right here, entry right here, perfect. But if we mix this, then we wait for this. This is also good, because this one is go into proportion blocks. The open, it tests rejection, then boom. Yeah, and we did take a screenshot of this. Yeah, right here. So the basic idea is the proportion block, right? And it retests that. We put the sell stop below that. When it moves high, sell stop, it could carry it into the trade, right there. But the condition that they have to be open below proportion block. So basically it respects the open of the candle. And this candle we watch in the real time. If you watch the recording we have, it up close and then boom, it go down close. We can short right now. So basically the ICT lifetime, straight setup give us some clue right here, and with the quarter theory give us some time alignment so we can go in and confidently short right here. You see proportion block and at around 10:30 right here. You see this is a huge order block right here. Another unlock first, go and put short right there. That's the idea. So when the market moving out, pay attention to up close candle. That's where we put our sales order going, or the smart money put the sell order in right there. All right, if we miss entry right here, here's another trend entry, huge for it right here, right? You have a breaker right here, and then boom, you have a displacement and create value gap, and then boom, right here at 1050, you have a retest of the value gap, breaker, value gap, retest. So we have a lot of entry right there. You see that? We're going to enter right here, and right here, and right here, because this gives us a high property setup. We know the Q1 is kind of consolidate, right? Accumulation. This one is, kind of expansion, but you can call it, accumulation. Then this one gonna be what? Manipulation, and then Q4 gonna be distribution. So with that in mind, and we saw the setup with the proportion or with the breaker, then we have high property setup right there. That's beautiful right there. You see? Yeah. Yep. And right here is a long time. You see right here. We missed right here, right? You still have another setup right here. The same idea. Right? Breaker, value gap, retest. And you see how precise it is. You see at 11:30. This is the marker right here, the order block for the smart money going and shorted. And what happened to this order block? It just rate this sell side liquidity. It's so accurate, very precise right there. See that? Yes, it rate the buy side liquidity. It tell you that it rate the buy side liquidity. What gonna happen? It's gonna go take this sell side liquidity from the long time right there, and it gives you the signal right here. This is the order block. Well, in order to enter here, you can go in. If you practice long enough, you're confident. But if you're not confident, then there are tricks right here we can do. Basically, let this go down and let it retest the open of this guy. Then we short right here. Right, we can put a sell stop when this guy above it. We can put sell stop right there. That's the open 92. Okay, let's do that. So let me see let's see, that's the open, right? Yeah, 93. Yeah, exactly 93. So the entry for us, we're gonna put the buy stop. You see this open above, put the buy stop, and it will carry it into the trade. And you see it retest exactly that level one more time. We always retest them before it going down or going up for that matter. So the high of this candle, 93. You see the exact 93. Boom, it's going down, and it take the sell side. You see the algorithm so accurate, right? You see that, and the sell side of this is confluent with this order block high right here. Very accurate right there. So you have a good trade right here, right? So how much we reach? We just put a buy stop in, sell stop, and reach. Look at that. We only 14 cents. Let's say we want the sell side liquidity of the lunchtime section right there. So that's a huge trade for it right there. You see 14 cents. And you got 1 to 10 risk to reward ratio right there. That's beautiful trade. Right? You have everything aligned. Your breaker, fair value gap, retest. And at this time, 11:30. Man, so accurate. Alright, we really pump up right now. Okay, let's do screenshot for this. That's amazing. Amazing how accurate the algo deliver the price for us. We just need to understand it, movement, and make money. That's it. Okay, so here we have this setup, right? This is ICT term right here. Basically, he calls it unicorn. It's too easy. It's very reliable. That's an idea. Unicorn setup. Basically, you have a breaker. In this case, it's a bearish breaker. It's a Dow close candle. It's bearish breaker, right? The Dow candle in the uptrend, it become order block, but in the downtrend, it become a breaker. So that's an idea right there. Setup right there. It's so clear, and oh man, can you believe that? I think we get in there right now. Buy stop at 508.93, and the entry time exactly at 130. I mean, how accurate it is. Not actually, it's not 135. Okay, we put a buy stop right here after this. Watch out for this, right? Before we know the concept, if we are trade with the retail, we say, wow, it's rejection right here, so I must go long. That's exactly when the short coming. Yeah, that's our our retail mindset right there. But now we understand how the algo deliver. We trade the opposite of retail. Before we learn about this, we thought, wow, we want in the real time, right? We saw this rejection. Wow, it might go long. Yeah, that's exactly when the algo is gonna get short for you. Wow, that's amazing right there. And targets. Just sell liquidity Q1, right? That's a Q1 right there, which is long time. Yes, exactly. It is real for us. And we have risk reward ratio 1 to 10. That's amazing setup. So basically, ICT's unicorn setup everywhere. Just wait for the time align and we short them. That's it. Putting 35 in this case. Right, we can enter right here, but this is gonna be a very short right there, right? If we enter there, then I think our target gonna be this low, looking for the wick right there, the candle. But anyway, we go over time for now. Really appreciate your time and interest. Right, we're very grateful for the opportunity. We do what we love, then success come to our way. Bye for now, and have a wonderful evening, wonderful weekend. Talk to you later.